Corporation of India, and Mr. Vineet Agarwal, Managing Director of Transport Corporation of India, or TCI, is now joining us. Mr. Agarwal, morning, and thank you so much for taking your time out and joining us here on ET Now. You came up with a strategic collaboration with Flying Whales. Take us through what the collaboration is all about and how will it really help the company going forward?
Thank you for having me. Flying Whales is a French-based company that is making these rigid airships, and these airships are essentially going to be used for lifting of heavy cargo. It's about 2 years away, but still the market access, the market planning is going on right now, as well as the feasibility studies are going on. But the idea here is that when you have to lift some heavy cargo, whether it is or very over-dimensional cargo, which cannot go by roads easily, you have something like this which lifts up the cargo and takes it to the destination. It could be turbines, it could be wind power blades, it could be getting to inaccessible locations in the hill areas, or even for defense applications when you need to move certain defense equipment to different locations. So overall, this is a very critical need for a country which is really spending a lot of, there's a lot of money that is being spent on infrastructure, and a lot of new capex is being done in areas in capital goods and other such areas.
All right, but along with that, Mr. Agrawal, just wanted to understand that what will be TCI's committed capital for this collaboration? Will there be any timeline for the same?
The estimated capex for this is going to be very small because the airship is not going to be owned by the entity that we are planning to work in from an operating perspective. So we're just going to lease that aircraft and use that facility. We don't have a exact view of what that capex will be, and the timeline is approximately 2 years from now.
So the capex is not likely to be on the higher side. That's the word coming in, and the time frame is 2 years. Mr. Agarwal, let's also talk about the revenue guidance that you had shared last time, and I believe you have given 10% revenue guidance for the full year FY26. If I look at the financials, you've already registered about 3,600 crores of revenue, and 10% revenue uptick as compared to FY25 implies about 4,900 crores of revenue for FY26. Are you confident of achieving that target in the fourth quarter of this year of about 1,400 odd crores?
Yes, approximately our guidance was about 10 to 12% for the consolidated number for the full year. And, we are close to that. And typically Q4 is usually the best quarter for the year for us. And we do expect to reach that number between that 10 to 12% from the top line. And the bottom line estimate was between 12 and 15%. We are already achieving that, so we should get to those numbers as well.
Right, we'll watch out for that. But along with that, Mr. Agrawal, just wanted to understand that what could be the implications on margins and what sort of volume growth will you be projecting, since you just highlighted that quarter four is going to be, is generally the strongest quarter for the company. So which segment can contribute the most in this growth?
So let's take a step back. September 22 is when, actually September 22nd, September 25 is when the GST rates change, and we saw a huge uptick in terms of volumes, whether it is for consumer durables, for the auto sector, etc. That continued in Q3 as well from October onwards because of the festival season. Q4, typically what happens is that there is a push towards closure of their books of most companies. So there's a push to sales, there's an inventory buildup that starts happening. So all of that is what we are seeing will typically happen in Q4. And essentially that means that we get a typically 5 to 10% type of volume jump over the previous year. We are looking at auto sector again to do relatively well in this quarter. We are seeing some uptick in the consumer durable side and something on the capital goods side, but it's still early days for that. SME sector is still a little weak, but nevertheless, I think overall the buoyancy is there for us to ensure that we get that growth for the quarter four.
Mr. Agarwal, also wanted your thoughts on the freight segment. That was reporting some problems in the last few quarters, and last time when we interacted with you, you did tell us that it will take about 2 or 3 more quarters for it to stabilize. What's the situation now when it comes to your freight segment business?
Yeah, so absolutely right. And then the LTL business, which has gotten affected to some extent, is also a function of how the MSME business is doing. So MSME per se has been weak. We know that credit offtake is lower there. There are challenges of costs there, labor shortages, etc., and those are affecting MSMEs across the country. Some of that is starting to improve, but again, it's a slower process. So let's give it another 3 quarters before we see a real uptick there.
All right, we'll watch out for that. But with this, Mr. Agrawal, we let you go. So good having you on the channel today. Thank you so much for your time.
Thank you.
All right, so that was the management of TCI talking to us about the recent collaborations. They are expected to pay off in the next 2 years while the growth guidance remains intact. But with this, it's time to slip into a very short break. We'll be right back.